Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, go to Arrow at heyarrow.com if you're looking for a great place to have tools to help your salespeople manage their customer base as well as get their deals done faster and with less clicks and less paperwork. So check that out at heyarrow.com. Shawn is with Hackett Financial out of Boca Raton, Florida, and Shawn's nice enough to come on a couple times a week to talk about what's going on. Shawn, how you doing this morning?
I'm doing good, Casey. We're a little chilly here. Low 60s in South Florida.
Yeah, your low is my high, so yeah, that's cool. That's cool. That's exciting. I can't wait till it's your low is half or twice as high as my high. So that'll be great. I can't wait for that.
I think that's going to be tomorrow.
Well, I really think you're about right because I think tomorrow's low is like 12 or something like that. So yeah, you're gonna get it. All right, man. Well, there's a lot of stuff going on. Watching the weather last night, actually, I started to notice the jet stream you're talking about and how the amplifications of that, where the dip down on the west and it kind of came up in the central part of the United States and dipped back down in the east, started to kind of show itself up. So give a little bit of an update on that. You talking about the back half of November going into December and what that looked like and the cold weather that was coming, and there is a shot of cold weather going to hit the central United States here. Not for very long, just a few days, but I think it might be the precursor to what you've been talking about.
Yeah, the amplified jet stream that is an offshoot of the sudden stratospheric warming event that we had late October, early December. We're starting to see that pattern get the upper airflow pattern get developed. We're starting to see in Europe ice cold. China had ice cold temperatures and blizzards. Remember, this goes around the whole northern hemisphere. It's not just a U.S. based thing. And it's going to be more of a persistent pattern now. At least central east, you're going to get more of this downward amplified pattern. And of course, as you climactically get further on into the season, the air gets colder and colder, and the temperature differentials get bigger and bigger, and then your opportunity for storms gets bigger and bigger. So everything is kind of happening the way I think we've been expecting to see it, and we're starting to get that initial change in the pattern where you're starting to see some of this happen. Looking just a few weeks down the road, it actually looks like we may have some freezing temperatures in central northern Florida potentially, which would be an issue for citrus and oranges and that sort of thing. And that would be pretty early in the season for Florida to get that. So yeah, things are happening. Remember, the weather models don't ever see the cold or the warm bias, but eventually they just suddenly see it all of a sudden. We're starting to see the 55 different model ones that are out there, and I watch them all just because I'm just trying to see when they're starting to pick up stuff, one after another. Casey, starting to see this change in the jet stream amplification, and so I think we're on deck for this to play out, and I think this cold shot we're going to get here this week is the first leading edge of this big change in the pattern. So,
yeah, it looks like it. Just looking at just the forecast for the temperatures that are coming out. We dropped down to, I think today's high is 69 or 65 or something like that, and then we dropped down into 40, and then we've got some overnights in the teens, and then we kind of pop back up into the 50s and going into the weekend. So there's definitely some cold air that's gonna hit us, and like you said, I'm looking forward to see what happens here this second half of November going into December. So on that front, we got to talk about oil. Oil is, man, I'll tell you what, it's taken off. The idea of $100 oil is creeping up here ever so closely each day. Seems like oil, there's not much out there that's going to really stop that from happening. And I guess we'll talk about oil a little bit in some of those energy markets that you're paying close attention to, and kind of what you see happening there going into this, again, this fertilizer thing, as well as just overall fuel issues that we're going to see going into the spring of 22.
Well, crude oil has two hats. One hat is, how's the economy doing? How's trucking doing? How many people are driving? How many people are taking airplanes and using fuel for economic reasons and vacation reasons, that sort of thing. So that's the big part of what fuel demand comes from. The other factor is diesel and heating oil to heat people's homes, especially in the Northeast. So the crude oil market got hit a little bit here over the last, I guess, 3 or 4 days on some economic concerns. But the heating oil market's really the one that's going to be the beneficiary of a cold pattern, especially a cold pattern in the East. That's really where demand for heating. So I would, instead of focusing on crude oil as much, because I think it's a mixed bag, I would focus more on the heating oil market. I think that's the market that could respond in an outperforming sense to a more persistent cold pattern here in the Central East. And of course, to the extent that drives increased demand for crude, it does. But I think crude could be stuck in the economy's not doing so good, but the winter's cold, but I think the heating oil market could actually have a pretty strong trend to the upside. Whereas natural gas is primarily heating your home, electricity to your home, and that's going to go up or down, not because the economy's doing well or poor, because people need to heat their homes or not. And obviously, with our weather forecast we've had for a while, and with the cold air starting to come in, last week, Casey, the injections into storage were essentially flat. It's the first time we didn't have an increase since the build-up season began last April. And it was still relatively warm last week. So with the cold air coming in, we're going to. What I'm getting at, we're starting the drawdown season now, and now we have to measure how much are we drawing down relative to what we normally do, and then start tracking that against how much we actually have, and how long is this going to go on? Because we're going to start tracking. As Shawn Ryan, we're going to start scraping in the bottom of the storage barrel when we get into March and April. So. Interesting times for natural gas, and it's been a lot of volatility in U.S. natural gas. Had a big setback here on some profit taking and all that sort of thing. But I think we'll probably, if we haven't already, we're very close to setting a secondary low in U.S. natural gas, and I'm anticipating this next surge is going to take us to new highs from what we saw before in all the winter months, including the month of April, which is where we're most interested in protecting, because that market is at a huge discount, which normally is correct. We think it's incorrect this year because of how late this winter is going to be ending. So.
Right. Yep. All right. So let's jump over and talk about Brazil. Interesting report this morning. They lowered tariffs on a lot of goods coming into the country, import tariffs coming in, one of which is ethanol. So a country that is that creates as much ethanol as they do, for them to lower that import tax on ethanol, it tells you that there might be some issues there that they're trying to address.
Remember, they have a corn shortage.
Right.
They have a sugar shortage.
Right.
Now both of those may ease up, but not right now.
Right.
Meaning we might have a big safrinha corn crop, but that's not going to be available till May, June,
right.
July. The sugar, well, we know we have a big shortage. Yes. We think the sugar crush could be bigger. We think they're going to have better production, but that doesn't come into play until March and beyond. So they don't have a lot of feedstock right now, Casey, to make a lot more ethanol. And And I think that's where they're at. They're at a situation where short term they're in a pinch where their demand for fuel is really high. I mean, I was just down there. I can tell you they are bustling down there economically. I mean, there were people moving, trucks moving. The place was rocking. So they're using a lot of fuel down there, Casey. Agriculture is booming down there. And so, they're just in a situation where they just need some ethanol. Now, of course, the U.S. is producing a lot of ethanol, record amounts of ethanol of all time. If you look at the crush and how much ethanol we're producing, and the ethanol margin's fantastic. So it continues to be a good story for those that are growing corn, that are selling corn to the ethanol plants. They're bidding up huge cash basis to get this corn in. And they're going to sell a lot of ethanol to Brazil during this window where they're short. It's good news to kind of sop up some of this, harvest supplies that always inevitably tends to depress the market. I think this ethanol story is going to clean it up without having to create any major downswing beyond what we've already seen.
Yep.
So,
well, a lot of stuff to pay attention to down there because of every report. Now it's kind of like everything that comes out, but every report is this is going to be a record soybean crop, record corn crop, record. So definitely something to pay attention to in the South American growing season as we head into that. Last but not least, let's talk a little bit about what's going on in pork. It is an odd place. The Chinese keep coming back in and buying some pork from time to time, not as consistently as they've been. They've talked about how they've got a big surplus over there now, so, I know why you have a surplus, but you're still buying stuff, so it kind of watch what I do, not what I say type of thing. So I guess as you look at the pork market right now, what are your thoughts there?
Well, we have this working thesis, Casey, and I think, and we've done a lot of research on this. The prevailing consensus is that the Chinese have rebuilt their herd, they overproduce, and now they're in a systemic oversupply situation. We disagree. We believe, from our work, is that they actually had a second serious round of African swine fever. It was actually a different strain than the first one that caused an initial herd liquidation. The problem is those with the healthy pigs said, wait a minute, I ain't waiting around so my pigs get sick and I get nothing. I'm going to sell them while I still can get something for it, then get nothing for it. And they started selling. And then all those that didn't do anything started losing $80 a head. And economically, they said, I'm out of business. I have to sell. So you had this mass liquidation stemming from the second round of African swine fever that occurred in the first half 2021, and then it unloaded massive amounts of pork supply. The pork price crashed, the hog price crashed. However, if we're correct about that assessment, there's a massive rebuild of the herd yet again. We're calling it African Swine Fever Act 2 is what we're calling it. And that means that they're going to rebuild the herd. There's another major shortage. Our estimates are between 30 and 40% of their hog herd got reduced in the back half of 21 because of this mass liquidation event. So big pork shortage. What does that mean? That means that they're going to have to come back and buy like crazy again from the United States. We think the first half of 22, they're going to be back like they were before, buying and buying. They don't have a choice. We think the demand for beef is going to go through the roof. And the thing with beef, though, the beef supply, because of last year's drought, because of high feed prices, global beef supplies are going to be down 3 to 5% over the next 2 years. And there's no hope for that change. The cattle cycles is long, so there's no way to change that. So we have reduction in beef cattle supplies, and we have this secondary meat protein shortage. So we're really excited about the cattle market actually outperforming the hog market this time. The last time the hog market, beat out the cattle market in the first wave of the African swine fever rebuild. We think this time around it's going to be the cattle market. So bean meal demand is going to go through the roof, Casey, in the first half. Corn feed's going to go through the roof. We think they could be back buying our corn and buying more soybeans to crush more meal. In fact, look at the bean meal rally over the last week. Just massive spike trade in bean meal. Something we'd warned about on your show before, that we were seeing the stars align for the potential for that to happen. And one of the most important indicators is that the number one feed for piglets, which of course, you have to have piglets before you have pigs, and that's how you rebuild the herd, is dry whey. The Chinese buy all their dry whey, or almost all of it, from the United States. We just sell a massive amounts of dry whey. The dry whey price has absolutely exploded here over the last month. I think it's up over 50% in just the last month as they're buying dry whey. Remember, they have to buy dry whey before the piglets come. You just can't say, oh, yeah, here are the piglets. We got nothing to feed them. You buy the whey first, the piglets come, and they rebuild the herd. That tells us that our thesis is correct. Or else why in the world would they buy so much dry whey if they had no need to rebuild the herd? They wouldn't be needing all this piglet feed. So I think that's a big story, Casey, for a pretty exciting ag market setup for 2022, the likes we just went through. But, this time around, back then when we went through African Swine Fever Act 1, we had tons of grain.
Right, yeah.
Now our stocks are depleted.
Yeah.
We had tons of pork. Now our stocks are depleted. We were growing beef production. Now it's on the decline. So we're going to go through this time with things really in a very, very much tighter situation. So we think that's a story that's going to get a lot of headlines, Casey, in the first half of 22. And I think we'll refer back to this show and say, remember we talked about all that? Well, I think that's going to be a big, big story that not a whole lot of people are yet talking about. So.
Typical stuff here, Shawn. You're breaking new ground on the Moving Iron podcast.
Well, my job is to look ahead. What are the newspapers going to say in March of 22? And that's my job, and is to figure when that is. I don't need to know what they're saying today. That needed to be traded 6 months earlier.
Right.
So today doesn't. I don't really care anything about today. I want to know what do I think they're going to say in March. I think they're going to say, oh my gosh, we've had a historic winter. It's never going to end. We just had, a blizzard of all blizzards in March. How are we going to get this crop planted? Oh my gosh, the Chinese in all kinds of corn feed. They're rebuilding their hog herd. I mean, I just feel all this is going to be the story headline for March. At a time that, like I said, we're just going to have a lot less available, and the farmer. He's just not. He gave a lot of ag supplies away last year for low price. He ain't doing it this year. It's lock and key. Come get it if you want it, but I'm not giving it to you this time because I need a higher price. It's a very different mentality. And the buyer who got caught not buying last year and chasing the market up is saying, "I want it right now." And that's why you're getting these strong cash bids in the market across the board. So.
Yep. All right, last thing, Biden and Xi Jinping got together and had a little powwow here. I think it was Monday, maybe. They got together. Anyway, Biden was, putting the screws to him about the phase one trade deal and what that looks like. Just because of the situation that we just talked about, for example, those kind of things might actually make it look like they're going to fulfill the trade one or the phase one part of the trade agreement, just strictly because of out of need, not necessarily out of necessity. So, I guess what are your thoughts there on that?
I've always believed that the trade deal was a political agreement that the Chinese did to just buy themselves time. It just so happened that they had some really, really poor crops last year, and they had to come in, not because they wanted to deliver on the trade deal, because they just had to buy the corn and they had to buy the beans. They had to buy the pork. And it made it look like they were trying to make good. I don't believe for 1 second they were trying to make good. And I think, once again, if I'm correct about the thesis I just laid out, it's going to look like they're trying to make good on the second year or, whatever they're supposed to commitment. They're not. But I believe they need to buy this, whether we had a trade deal or not. So at the end of the day, I have never believed that the Chinese were ever going to buy stuff from us they didn't need. I believe they did it because I think they might have suspected they needed to buy a bunch of products anyway. And I think they wanted to make sure that if they did need to buy a bunch, there was an agreement in place that said we were going to allow them to buy a lot. Because the biggest fear of the Chinese is someone like Biden says, you know what, no more exports for you. But if we have an agreement that says they allowed to buy a bunch, pretty hard to break. I mean, they could break the agreement, but it's harder to break an agreement if you have one than if you didn't have one at all. I almost think they did it to make sure they wouldn't get locked out of our market. That's how I think. So
that's a good point, man. I never thought of it like that. So that's an angle that I don't think many people have considered. So, man, good job.
Yeah.
All right, Shawn, plenty of stuff going on here, a million different things going at you. If folks want to reach out to you and get more information about what is You know what? Hold on a second. Let's talk about one more thing.
Sure.
Hard red winter wheat. And I meant to bring this up at the beginning of the show. Looks like the kind of what we saw got planted in Kansas, what we saw got planted in Oklahoma, Texas, those things like that. Looks like the crop may have improved just a little bit, just because of some timely rains and some warmer than normal temperatures that we've seen this fall. Talk about that a little bit, and kind of what are your thoughts there as we head into this bigger picture, I guess, this winter, when we look at some threats we might see on the winter wheat crop.
I mean, look, because we're going to have such a persistently cold winter, there's always an opportunity you get a cold blast without sufficient snow cover. I don't know how to forecast that specifically, those microregions,
right.
Are they going to have enough snow or not? My suspicion is, and my forecast is, we're going to have a whole lot more snow this year than we had last year. So the opportunity for a winter kill event is the probabilities I think are far less. Even though we're going to have a lot more cold,
right.
I think we're also going to have a lot more snow cover. So I am kind of toning down the opportunity for a winter kill event this winter. Doesn't mean it can't happen, but I think that it's less likely. I am more worried about post-dormancy. When it's going to be so cold for so long, so late. When do we come out of dormancy? When we do come out of dormancy, do we get a freeze over the top? I mean, I'm more worried about what happens when we get into the dormancy season than I am about getting a winter kill event this particular season. So I think once we go in, as this crop, goes quiet into dormancy and we go into the winter season, we got a bunch of snow. I just don't see that being a likely catalyst, but I would be looking at March, April, May for a chaotic post-dormancy season to really light this market up even more than it already has. I mean, it's already been lit up already on the shortage of high-quality wheat. But what could happen if the market looks at a failed post-dormancy season for winter wheat? I mean, it could be pretty wild, Casey. It could be really, really wild. So can't rule it out completely, but I would tone down the idea of a winter kill event this winter just because I think it's going to have a lot more snowfall.
Right.
So.
Good deal. Well, yeah, plenty of stuff to pay attention to, Shawn. Now we'll close down the show. If folks want to reach out to you, get more information about what Hackett Financial can do for them, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. All kinds of information on there, interviews and such to see how we look at things and what we do. Yeah, and if people are more interested about this thesis about African swine fever, we did a bar chart article on Saturday that goes over a little more detail, and you can also go on a link there if you want to get that report. You can certainly go there and get that. So hopefully in all of that, if you think we can help you, your listeners, we'd be glad to do so.
Yep.
So
check them out, guys. There's a lot of good information there. Go to HackettFinancial.com or HackettAdvisors.com and check that out. And a lot of great information there that you can just pick around and see what's there. So, Shawn, appreciate you being on the podcast, man.
Always great, Casey, and I'll look forward to it later this week.
Yeah, me too. So I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related. Might go out and check YouTube too. I got a YouTube channel out there, Moving Iron Podcast. Check that out, and if you like that, smash the like button. And then I guess that's what the kids do these days. So do that, and then we'll get back to you there. So with that, I'm Casey Seymour. Let's go move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to AxonTire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.